GameStop pulled off something pretty huge in 2025. They issued two massive convertible debt offerings, both of them in the month of June. The first offering was a $1.7 billion convertible senior note offering, and the second one was a $2.25 billion convertible senior note offering. And this just happened 3 months ago. This is super recent, with a combined total of over $4 billion that GameStop acquired. Think of this as borrowing money, but with a twist that could benefit both GameStop and the people lending them that money. So let's start from the beginning real quick. What is convertible debt? Imagine your friend is asking to borrow $100 from you. But instead of just paying you back the $100 plus some interest later on, they give you a special IOU that says, I could either pay you back $100 with the interest, or if my lemonade stand becomes super successful, you could trade this IOU for shares in my business instead. What sounds better? It's a loan that could turn into ownership, equity in a business, in the company if certain conditions are met later on. Let's just pull up this $2.25 billion right here. Let's take a look at the key features. The biggest one that stands out, 0% interest. GameStop notes pay 0% interest. That's like getting a free loan. Most loans charge you money to borrow, but GameStop got this for free. They were able to acquire $2.25 billion for free because investors wanted the potential upside in GameStop stock. So what does that mean? The investors in this convertible debt have until March 15th, 2032. The holders of this convertible note will have the right to convert their notes only upon the satisfaction of specified conditions and during certain periods. March 15th, 2032. That's such a long time from now, 7 years from now. So the lenders of this note can convert their loan into GameStop stock before or at that date. So the conversion rate for the notes will initially be 34.5872 shares of GameStop shares per 1,000 amount of such notes, at a conversion price of $28.91 per Class A common GameStop stock. If they're not converted by that date, then GameStop has to pay back the money. It's currently sitting at $25 right now, $11 billion valuation. We're seeing a little bit of movement lately because of the dividend of warrants they just issued to shareholders. If you haven't seen my video, take a look at that too. So the conversion price was set about 30% higher than GameStop stock at the time when the deals were made. This means the stock has to go up significantly before conversion makes sense for investors. So why does this benefit GameStop and why did they do it? Well, basically, it's free money. It's literally free money. The price of GameStop is moving like crazy, by the way, right now. So anyways, with the $4 billion they just raised right here and pays zero interest, that's like getting a massive loan from the bank and not having to pay them back anything extra. This pretty much shows how investors believed in GameStop's potential in the long run, and remember they have 7 years to convert it. That's a long time. That's a long time. And how does this benefit the stock price? Well, no immediate dilution. When companies issue regular stock, existing shareholders immediately own a smaller piece of the pie. With convertible debt, dilution only happens if and when the debt converts to the stock. So GameStop gets the cash, but might not have to give up ownership for years, if ever. They also have some flexibility when they have to pay back these loans. GameStop can choose to pay back in cash, stock, or a combination of both when that conversion happens. So in the next couple years, this gives them options based on what's best for the company at the time. So why do investors like this deal and why was this thing so hot? Who would ever give a company all this cash at 0% interest rates if they knew they weren't going to make a lot of money? Well, number one is a safety net. If GameStop stock tanks, the investors still get their money back as a loan. It's like having insurance on their investment. They also get the upside potential. If GameStop stock rockets up, which is currently happening right now, $25.68, then they can convert and potentially make huge profits. They get to participate in the meme stock rally upside without as much downside risk. If the stock never reaches that conversion price, they just get their money back with no gains. So it's a no-lose situation for people offering this convertible senior note. Now, this was all extremely rare for a company that was struggling just a few years ago. It shows how much the market has changed and how meme stock dynamics can create unusual opportunities. The fact that they got 0% interest rates on such massive amounts shows incredible investor confidence. So this strategy transformed GameStop from a struggling video game retailer into a company with a massive war chest. In total alone, they have $8.7 billion in cash. GameStop is potentially positioning itself into an entirely different growth opportunity than anyone can expect. Shorts might want to close soon. Thanks for watching this short video. Don't forget to like, subscribe, and we'll see you in the next one.